First, though, joining me now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, good to see you. You've been riding this rally from the beginning. Your reaction to this strength in stocks?
You know, I love it. I think that we need to have a China deal, but let's understand kind of what's underneath the surface. We need those rare earths, we need those magnets, and we need those export certificates from China so that our advanced manufacturing, the Department of War, and basically everything semiconductor can still run. So if we can continue with these talks and we can normalize that relationship, we can worry less about, you know, a conflict in Taiwan. We can worry less about the most important supply chains that make our technology work. Outside of that, you know, this market is priced for perfection, and it's priced for a disappointment if we don't get what we need from the Fed later this week.
Do you think that you want to sell into stocks here? So, any rally?
You know, I have been. Yeah, I've been trimming some of my larger names, some of the big overpriced AI stocks. Listen, I love my overpriced AI names, but I also love some of my cyclicals that just have not performed this well because we don't have clear trade policy. I would say that if you're overweight, if you're over leveraged and you bought into that, you know, Liberation Day volatility, now would be a great time to rebalance your portfolio because, again, no matter what Jerome Powell says, even if he cuts, you know, short of a 50 basis, you know, point cut, everybody's going to be disappointed. We're going to be disappointed because it appears maybe he gives us what he wants, but it isn't independent enough, or his forward guidance on the pace of the cuts might not be what people want. So I think you've got a lot of risk going into the end of this week.
So you are expecting a disappointment then. I mean, look at yields right now on the 10-year, 4.04%. The two-day policy meeting, of course, kicks off this morning, and much of the market is expecting a cut of at least a quarter point. This would be the first cut in 9 months. Jay Powell is going to speak tomorrow afternoon after the decision, about 2:30 p.m., so we will hear more about his thinking there. You've got fired Fed Governor Lisa Cook, part of those discussions, a D.C. Circuit Court blocking President Trump from immediately terminating her position, basically ruling last night that Lisa Cook may remain on the Fed while the court considers if President Trump had the right to fire her for cause. You've also got Stephen Moran joining the board after the Senate confirmed him last night in a 48-47 vote. Lee, are you saying a quarter point cut from the Fed would be a disappointment to this market?
What will be a disappointment is not the quarter point cut. That we've got to have. What's going to be a disappointment is when Powell starts talking in the press announcement afterwards about the speed of rate cuts between now and the end of the year. And my concern is that if he doesn't give the market a really rosy, we're going to start cutting every month going forward, there could be a sell-off in that type of disappointment. But here's the thing. I'm bullish. I see the market doing very well going into next year. I see the earnings are there from AI. We keep building it out. I think you get a more clarity on trade, which is going to help manufacturing, which is going to help all those slower, out-of-cycle value names. So both of those sectors are going to win next year. The issue, we may have to wait until a new Fed chairman in May to really get the rate cuts that this market wants to see a sustained rally going through next year.
So
use that volatility.
Yes, best possible scenario then out of this meeting is if you get some kind of a suggestion or, you know, narrative from Jay Powell that there's going to be a string of rate cuts and you're not expecting it.
Yeah, exactly. I'm not expecting it, but I would love it. It would keep the valuations hot, and that would keep this market rolling.
Well, I spoke with a major source at the Fed the other day. I reported this yesterday, and she told me that they've got 2 rate cuts penciled in, possibly a third. But again, we need to hear Jay Powell suggest that in order to have markets happy. You're right. At this point, quarter point is a must. If we don't get that, we see a sell-off. You've also got retail sales and some economic data to look at. You've got retail sales out this morning. The expectation calls for an increase of 0.2%. When you strip out autos, it would be a gain of 0.4%, Lee. What about that? How important is that in today's market?
I think the most important thing for people to frame around retail sales is looking at the higher end consumer. We know that we still have some creeping inflation around. We know it's coming down. But if the top 20% of U.S. wage earners see a lowering of wage inflation, or we see that retail sales down there, that's where we're going to have a problem. Last couple of weeks I've been hearing retail CEOs say the consumer is fine. They're really talking about the upper end consumer. So that's where all of our focus of Wall Street analysts, if you don't have that high end consumer spending, then you're going to see sentiment start to drop.
All right, we will leave it there. Lee, great to see you. We'll be watching all of that play out. Thank you, Lee Munson. Stay with us. We'll be right back.